I commend the bill to the House.
The question is that this bill be now agreed to in principle. Call the member for Baulkham Hills.
Thank you, Madam Speaker. And can I just say that it is refreshing to see the opposition take such a proactive response to this important legislation put forward by the Ministers for Fair Trading. Credit and credit powers are, of course, an important part of our federal constitution, but at a state level, it is normally the state authorities, state government departments and indeed state-based charities that pick up the pieces when these credit laws allow for such pain and suffering in the community from those who have to use them without any other options. Madam Speaker, the Credit Commonwealth Powers Act 2010 provided for the annual percentage rate to sunset 12 months after the 1st of July 2010. That's just 1 month from today, in the expectation that Commonwealth laws will be in place. However, the Commonwealth Government is still consulting with stakeholders and developing options for the increased regulation of payday and other short-term amount lenders. Whenever that is decided, it is not likely to commence until 2012. The industry, that is the short-term lending industry, has three main arguments against the interest rate cap. They cannot recover costs and will go out of business, that low-income consumers will then be denied access to credit, and they're also arguing that national credit laws provide sufficient protection as it is. We can debate these claims, Mr Acting Speaker, but there are strong counter-arguments. Some short-term amount lenders do not operate lawfully within New South Wales, and I will say something about that in a moment. But despite the cap, others continue to operate but use avoidance techniques, which is very common in the financial services industry. A quick scan of the internet or suburban shopping centre can also show that there is no shortage of offers to vulnerable consumers. National credit laws require lenders to have an Australian credit licence, belong to an external dispute resolution body, which is of course very, very important, and engage in responsible lending. Some payday lenders admit to structuring their businesses so they can operate outside the national credit code and its associated protections. Mr Acting Speaker, community legal centres and final counsellors who see clients caught up in the debt spiral and other negative effects of high-cost lending maintain that despite the avoidance mechanism, the New South Wales interest rate cap is an effective consumer protection mechanism. Mr Acting Speaker, the 48% maximum annual percentage rate, inclusive of fees and charges, sends a clear signal to the market about what constitutes lawful and unlawful lending. Advocates are able to negotiate remedies for their clients on the basis of an alleged breach of the cap. And I don't think there'd be many members in this place who have not seen at some stage in their careers, or certainly in their personal lives, people that have been caught up with the debt spiral. I can say, Mr Acting Speaker, that as someone who grew up in Western Sydney, I've been exposed to many people who have unfortunately been let down by their employers or have been let down by business operators and haven't been able to get access to cash, haven't been able to get access to cash that they were either rightfully owed or haven't been able to get access to cash that they expected to be in receipt of. And I can tell, Mr Speaker, from my former role as the Chief Executive Officer of the Civil Contractors Federation, we were also responsible for an organisation called Golden Buckets. That, Mr Acting Speaker, was an industry association that had as its members a number of micro businesses, mums and dads who might have owned one bobcat and a few shovels, and their main reliance was on small business. Their main clients were either small business, local councils, or principal contracts, or even subcontractors. Nothing wrong with that, and as micro businesses, they operated quite well. But if a local council or a principal contractor or another subcontractor, or indeed just any client, did not pay on the day that there was an expectation for these operators to be paid, they would find themselves in dire straits. They couldn't even afford the money to pay for petrol to fill up their bobcat. This could have a dire consequence for their business, because if they were under contract to complete the works that had been laid out before them, you would know, Mr Acting Speaker, as a solicitor, those two considerations weren't necessarily were not interdependent. They could not rely on the fact that they didn't have money to maintain their plant and machinery just because they hadn't been paid by another contractor or subcontractor or indeed a private client. So what we would see was these small businesses go out and go to payday lenders. They would go out and have to borrow $100 from a payday lender at extraordinary amounts, and just to fill up their bobcat with petrol, just to make sure that the operations of their business could be continued. This type of operation was not uncommon, particularly in the early days of the GFC, when these businesses were working for principal contractors that had major overnight cash flow problems. Unfortunately, they were reliant, they were susceptible to go to these unscrupulous payday lenders. It was quite a tragic time. And I can say, Mr Acting Speaker, that in my own electorate of Baulkham Hills, as well as the area that I grew up in Bankstown, there are more than a few payday lenders, there are more than a few unscrupulous lenders who are operating outside the realms of the industry norms. And I would commend to the opposition that a lot of these people are relying on this parliament to push this legislation through quickly, fairly, and we can send the message back to the Commonwealth. These are issues that the state government are monitoring. Mr Acting Speaker, Consumer Credit Legal Centre New South Wales Principal Solicitor Catherine Lane said the centre strongly supported the New South Wales Government's decision to expend the 48% interest rate cap. It is fundamental protection for vulnerable and the disadvantaged consumers in New South Wales. Catholic Care Financial Counsellor Coordinator David Bell said the cap helped to protect vulnerable people in a market where the forces of competition far outweighed the desperation and other factors. He explained that many of the people seen by financial counsellors have borrowed short-term money at exorbitant and unreasonable costs to their significant detriment, hence my previous comments about small businessmen. But Mr Acting Speaker, nobody here is saying that short-term lending is a bad thing. It is convenient. It certainly is convenient. The Minister has said that. The opposition have alluded to the fact that these are businesses that really should be continuing. And I must say that when I first discussed this legislation with the Minister for Fair Trading, I too said, isn't 48% reasonably high? I mean, not as high as some other figures that have been bandied around, but those figures are probably being forced upon the community from unscrupulous lenders who are operating outside the industry protections. But if you do consider that a 48% interest rate over only maybe a 1 week period is paid off within that 7 days as per the terms of the contract, it actually isn't that amount. So that's a $100, as the Minister explained to me in a private briefing, a $100 bill, a $100 loan that might be handed over is actually only about $6 or $7 over the course of the duration of the contract, being 7 days. We're not denying the fact that people operating in the financial services sector are entitled to make a quid. Nobody is denying that at all. What we are saying is that people that are running these operations in small markets need to know that there is somebody monitoring this important piece of legislation and certainly the operations of their businesses. One of those organisations, of course, Mr Acting Speaker, that have regular contact with the victims of those who unscrupulously lend are, of course, the Salvation Army. And the Salvation Army's Tony Devlin has said that people struggle to repay high interest, short-term loans and had to cut back on basics such as food and rent to make repayments. How many times have we heard of people foregoing a meal, foregoing the heating of their home because of their financial position? It is a very, very tragic time for us in Australia to be looking at people like pensioners, small businessmen who are eating baked beans and who are not being able to keep warm during the winter months simply because they've committed themselves to unscrupulous lenders. The Salvation Army's Mr Devlin said he commented that these loans can cause undue stress and anxiety for people who are often already in hardship and welcomed the move by the New South Wales Government, and certainly welcomed the interest from the Minister for Fair Trading in this important event. Again, nobody on our side of the House begrudges a bloke the right to earn a dollar. Nobody on our side of the House says that the convenience and the availability of short-term lending is not something that needs to be available on the market. We are just saying that because of the unique nature of the finance market, the desperation of those who are quite regularly exposed to their services needs to be considered. We need the industry, the finance industry to know, and the community to know, that there is a level playing field when it comes to the financial services of this state. We want to make sure that this legislation is pushed through. I mentioned in my opening remarks that I commend the opposition for their interest in this. I suspect that many of those members opposite us are in electorates where this type of activity is just as, if not more prevalent than those who maybe come from those electorates that are more affluent. Therefore, I commend this bill to the House, and I look forward to it being referred back to the Commonwealth for the appropriate action. Thank you, Mr. Speaker.